my analysis of the driver for growth and the opportunity for the UK follows on a very simple piece of economic analysis that John Rose, the ex-Rolls-Royce CEO, used to make. He used to say that there are only three fundamental ways of injecting prosperity into the system. One is you grow it, the second is you dig it out of the ground, or the third is you use know-how to turn something into something more valuable. And in the UK, our farming is actually pretty efficient. It's going to be hard to get a lot of growth there. And sadly, Peckham is not sitting on vast gold reserves. So we're left with number three. And number three, it's important to understand, is a very general statement. It covers the ability of UK advertising industry, people who create brands, people who create television formats and sell them around the world. But also it covers people who create amazing bits of technology. So where are we in the UK? Well, we're actually in a very good place. And the reason is because of our education system. At the top end of our education system, we are still in the technology-related areas turning out the very best graduates in the world. Our top universities are right up there with any of the competitors you'd find anywhere else in the world. And that is an incredible asset. But rather like some country that has amazing oil reserves under the ground, we have not been very good at extracting that into economic impact. And we've seen that over the years. For example, when I go to Silicon Valley and I'm feeling a bit lonely, you will be amazed at how many of the heads of engineering of the Silicon Valley companies are Brits that have left and gone there. So the question is, how do we get the economic impact that comes from this incredible natural resource we have in these brains to work? And that's been something that has been something that I've been thinking about for a great deal. When I started in the tech, I was an academic, and there were many, many problems. You couldn't grant share options. There was no finance. You had to have 3 years profitable trading before you could list a company. Well, many of those problems have been bashed down by the various people who've gone before and created businesses. And I view it rather like a pipeline. And you start at one end with an idea and a startup, and at the other end you have a world-class multi-billion business. And the wonderful thing that's happened in the UK during my time is that we've proved that that pipeline is unblocked. You look at a company like Arm, which now absolutely dominates its space from a startup all the way through. And so now the goal is, as we walk along that pipeline, where is it narrow? What's the constraint that's stopping more of this happening? And through a great deal of work and some good government policy, we now are in a situation where we have a very vibrant startup community. We're seeing much better translation of technology out of the universities, but we still have problems. But they're high-class problems. They're at the end. The capital markets in the UK are almost dysfunctional for these kind of companies, which means that the companies get sold too early. Typically at about 100 million valuation, the companies are sold normally to typically US acquirers who then take the benefit of that technology. And what we have to have is a situation where some of those companies are in a position to run on and go from 100 million to 3 or 4 billion because of the effect of feedback that has in terms of training people, etc. So there's work to be done. Sherry's report is very important for everyone to read because it starts to address these issues now that we've been successful in getting to a certain point to make sure that we don't have $5 or $6 billion tech companies in future, but we actually have 10 or 20 in the UK. The next question I was asked to think about was, what are the disruptive technologies? Well, the first thing to say is we are in a period of incredible change and opportunity from the technology. Some of these things are both threats and opportunities. Cyber security is a very real, fundamental change. It is not an add-on. It is inherent to doing business in the digital world. And the technologies there are going to have to move very fast because the threats are very fundamental. New interesting areas, personalized medicine, data-driven medicine, the outcomes and the cost efficiencies by using these technologies are going to mean that they are inevitable. But our institutions are not capable of handling these models. Our regulatory framework do not work on the basis of small personalized systems, but they're built for large general cohort testing. Fintech. London is in a very interesting place for fintech. We're seeing some fundamental technologies like blockchain, which could really rewrite the way in which financial institutions do things. But actually, probably the biggest opportunity for London is in something that is very boring. It's reg tech. It's how do you regulate these complex, unstable, multi-feedback systems we have? Well, that's going to require technology. And although it's boring, I think it's a very lucrative area. Internet of Things, very hard to work out where the money is going to be made, what the value chain is there. But you can imagine that we're suddenly going to have large numbers of connected devices. Those connected devices are going to have to understand what's around them. You know, your car driving down the road has got to be able to understand the road signs. Your fridge, that great cliche in the IoT world, has actually got to be able to look inside itself, recognize the milk, and work out that it's going off and you're running out. This all will require use of some very powerful technologies. But the most fundamental change that's going on is almost unseen, and this is the effect of machine learning. So this is machines that can actually start to reason and understand. And this technology is going to be a revolution. It is now, after many false starts, actually here. It's getting better and better and moving faster and faster. And to understand the difference here, if you think about a very sort of simplified view of the Industrial Revolution being about replacing muscle, in the late 60s we had IT revolution, which was about replacing very simple repetitive tasks, like, for example, adding up a ledger. And we saw shifts. We suddenly had far fewer ledger clerks in the world. But it was okay because we created a whole new class of employment, which was all the people that had to keep the computers going in the IT industry. What we're about to see with these machine learning abilities is a direct assault on middle-class jobs. A lot of the middle-class jobs will now have a large amount of what they're doing automated away in the way that these jobs have done in the past. President Obama commissioned a report on this, and it was very negative. It talks about the hollowing out of middle-class jobs. The work that's done in the UK on this is a bit more positive because rather like in the 60s, we couldn't have predicted all the IT specialists the world was going to have. It is likely that this new revolution will create new jobs that are very different. But the one thing it tells you is there's going to be volatility, and there's going to be changes in skill sets, and there's going to be a need to adapt. So the world is likely to go through some significant change. Other things we're seeing are diversity of value creation. If you go back to the 1850s and you look at someone tilling the land, your best tiller of the land versus your median tiller of the land, productivity difference would have been very small, perhaps 1.5, 1.6. Now, my most valuable software writer creates value at 100 times the median. So you've got some interesting forces in society that the technology is going to deliver. Intangibles, all of this intellectual property can move around the world. It can be anywhere. People can work from anywhere. It can be created in one place and exploited in another. This means that the ability of the nation state to do things like run traditional taxation models are going to be very difficult. So is this a positive thing or a negative thing? Well, we're kind of in a race. Technology is going to cause a lot of problems, but it's also going to fix a lot of problems. And it's very hard to call which way around. If you have unskilled populations, is the technology going to provide enough productivity that those people are still well off? Or is it actually going to displace them? It's very hard to call which way it will go. Thank you very much.
Mike, thank you very much. Thanks. To have a seat. I'm sure we're going to pick up on the productivity. I've just had this vision of the fridge looking inside itself and asking some searching questions. I thought that's what we were supposed to do. But anyway, Jim O'Neill, you're next on.
Thank you. Good morning. Thank you very much for inviting me, Michael, to share this, what seems like to be a rather cool, trendy crowd. I don't know what the hell I'm part of it for, but there you go. I'm sort of going to, as succinctly as I can in such a short space of time, reflect on my old life and some of the sort of new things I'm involved in. As you heard from Michael, I can't resist saying this at the start, never let an opportunity go to waste. I'm currently immersed in probably the biggest professional challenge I've ever had, really, which is trying to solve global antimicrobial resistance. And given there's a lot of tech people here, one of the big things that we're interested in is reducing our need for antibiotics. So at the core of it, we want Google for doctors. So forget all this other nonsense many of you are trying to create. Focus on Google for doctors. Economic growth, the question that was set, I find myself thinking, I don't know if we'll have time in this panel, but I'm back on some other one later, but do we mean economic growth for everybody or growth for companies? And I think part of the issue amongst why this election's so complicated is the context, of course, of economic growth. Economic growth as a mathematical thing is driven by two things. It's driven by the number of people at work and their productivity. It's as simple and as difficult as that. And actually, as Mike said, I'll reflect as I go along, the UK actually pretty well blessed also on the demographics, or it should be, but also linked to partly my second point here, something that has become so controversial, not just in the UK, but also in Europe. We don't seem to like, as a country at the moment, immigrants. And if you haven't got great working population demographics, you certainly need skilled immigrants to help economic growth, not least because there's a lot of evidence that they are major positive contributors to productivity. And yet here, and in many other European countries, there's a pretty strong mood, based on polls at least, that we don't like them. So linked to my opening references to what is it we're really focusing on, there's something wrong going on in society with that. Productivity is driven by all sorts of things. The ones I highlight there are governance, education, technology, trade, and perhaps agglomeration, which is, you also heard from Michael, one of the really fun things I've been involved in. It's sort of officially finished, but we had so much connectivity with time and policymakers, the cities work I've focused on. Since we finished, very importantly, the OECD has published, by their standards, sorry to be rude to the OECD, one of the most interesting things I've ever seen, a study showing that actually agglomeration appears to be associated with higher productivity, something to do with perhaps keeping up with the Joneses and people trying to learn, making it easier to learn and so on. It's a first time I've ever seen any quantifiable numbers that demonstrate what seems to me to be pretty obvious. Very quickly, if you can, I don't know if can everybody see this? So this is just from a global perspective. Amongst the things which is also fascinating about economic growth is most people that talk about it, partly because it's complex, don't have a clue what they're talking about. And that includes lots of people that are paid very large amounts of money to talk about it. And so these days you read persistingly never-ending negative things about how economic growth is struggling. I certainly don't have anything like the time I need to go through this, but actually that's wrong. The past decade, despite two horrific Western-centered problems, tech and finance have been at the core of both of those, interestingly, maybe linked to the opening comment I made. World growth has accelerated. We are living on a Piketty, is this going out live with Bloomberg?
Yeah.
Oh dear. Oh well, I'll say it anyhow. In my opinion, Piketty has done the world a complete disservice. We have got major issues inside national borders with inequality, but we are living through the biggest decline in global inequality that is evident from data. And it's because of this massive growth in China and the emerging world. And that's why world economic growth has done a lot better than most people still think, and still is doing, despite the fact China is slowing. Linking across a number of themes, what more could you want than the world's trendiest, fashionable consumer accessory stroke tech company yesterday giving further evidence that actually it's a Chinese consumer company. Apple's results demonstrate even more that if you've got the right brand and you're trying to do the things that the biggest rising consumers in the planet wants, you're going to do pretty well. And it seems to me Apple is basically becoming more and more of an emerging market, particularly consumer-related company. Linked to what I've said, here's a picture of the world's largest economies. Most of them are ones with a lot of people. So if you have a lot of people, it's pretty easy to become big. And that is certainly one of the things which is allowing the UK to slowly grow, despite our many policy errors, faster than other places, because we have better demographics, certainly than much of the rest of Europe. No time to focus on it, however. This odd-looking thing, VSG, is an index I've created with some friends of mine. It's a follow-on from something I used to do in my Goldman life. It's variables for sustainable growth. 10, I used to say 10 was the Manchester United of VSG. It's maybe, again, linked to something in Luke's world, perhaps. I don't know if you're even interested in sport, but maybe Bournemouth should be the... Interesting in the obsessive world of how much money one thinks they can make in football these days, that Bournemouth is doing so well. Maybe it's something to do with the fact they sit in a very prosperous part of the country. Who knows? But these are the countries that score the highest on such indicators around the world. One of the, I've said this at various other events in this building before, one of, if not the most interesting country in the world in my lifetime is South Korea. It is the only emerging nation of more than 40 million people that has transformed itself in my life to being a pretty wealthy country. Same GDP per capita as somewhere like a Spain these days. And linked to a couple of things Mike focused on, and linked to some key parts of the productivity components of this. Really good at education, extremely good at what I call inclusive technology. So not just technology for the elites and people in this room, but technology availability for everybody that lives in their country. Final thing I thought I'd finish on for now at least is the background to some things about the city stuff, which I guess is how Michael and I have spent so much time together the past year or so. I was asked to lead this independent commission about what can we do, if anything, about trying to promote more growth outside of London. It was done consciously not at London's expense. I describe London as the brick capital of the world. We should celebrate that fact. But part of it is also agglomeration. And can there be things done elsewhere in urban Britain to mimic some of that and what goes on elsewhere in the world? And the Chancellor's Northern Powerhouse was basically stealing what I rather unfashioned, one of the worst acronyms I've ever created, Man, Chef, Leeds Pool. You have these urban centres that are all within 30-odd miles of each other. If you put them all together, not administratively necessarily, but in terms of mind and infrastructure, it actually involves as many people as London. And two comments on that. I don't really understand why that hasn't featured more from the current coalition in this election campaign, because it's something that feels to me there's quite a bit of momentum. Secondly, linked to that, all of those of you from those places and other parts of urban Britain, keep pushing these lunatic political leaders of ours post-election, because it seems to me a bit of a door has been opened and linked to creativity and certainly things involving tech and startup. It seems to me there's a lot of things, not just university related, but university dominated, but also with broader skills issues that we demonstrated in our final report could raise Britain's trend growth rates by 0.2% over the next 25 years. 0.2% might not seem much to you, but if that had happened in the last 5 years in terms of belief about the trend, it probably would have resulted in better polls for the current coalition than we have seen. Thank you very much.
Thank you, Jim. Thanks very much indeed. Great. Finally, Luke Johnson. Thank you, Luke.
Morning. I was going to talk about entrepreneurs. They're a relatively rare and special breed who perform a very vital function in society because they initiate new enterprises and they are the lifeblood, I believe, of our economy, and they are the future. I think, by contrast, there are often things wrong with big established companies. They tend to be bureaucratic. They become institutionalized. They're often riddled with office politics. Those that rise to the top in them are often better at management games than real leadership. I think often they set a bad example for capitalism by paying themselves 300 times what the lowest paid workers in such organizations receive. And these are people who, the biggest risk they take is they might lose their job and get a payoff. Older organizations often have large boards where consensus rules, where diplomacy is valued more than facts, and often it's simply about preservation of status quo. Essentially, many big companies are in the long-term management of decline, and they are also where I think crony capitalism is often to be found at its worst. Now, on balance, big companies create more or less no new jobs. Research demonstrates repeatedly that the considerable majority of net new jobs come from the private sector of smaller, newer businesses, particularly the Gazelle cohort, run by teams who have the ambition to really grow. Now, we live in an era where jobs for life in big companies are no more. Neither are, in the private sector anyhow, defined benefit pension schemes. And I think a lot of people now see the advantages of working for faceless multinationals have faded. And I think this generation are much more excited about working for themselves. Last year, there were a record number of startups in the UK, over 580,000, up 10% from 2013. Almost 15% of the workforce are now self-employed. That's twice the proportion that it was 15 years ago. And interestingly, talking about immigration, the Centre for Entrepreneurs showed that migrants are responsible for 1 in 7 new companies in this country that employ over 1.2 million people. Very soon, I hope, there will be a great moment when the number of people who work for themselves outweighs the number of people who work for the government. I think this long-term structural shift will be a moment to celebrate. And I think it's wonderful that many more highly educated people see entrepreneurship as a valued career option. New firms are disproportionately innovative. They are the triggers for the creative destruction that defines a dynamic economy. And what typically happens is that old firms either have to reform or long-term they die. And this constant churn of ideas and survival of the fittest is what makes for a more prosperous society. I think now might be one of the greatest times ever in this country to start a business. There's more advice than ever, more mentors, more equity finance probably than ever before. According to the British Business Bank, equity investment in small companies has doubled in the last 3 years. And obviously technology has made starting and testing a business easier, quicker, simpler than ever before. And I think that is a tremendous driver of entrepreneurship. Meanwhile, I think the overall economic background of roughly 3% growth, unemployment below 6%, low inflation, low interest rates, is a fine backdrop for people thinking of taking the plunge. And I think we should be proud and confident that the UK is becoming a world beater in startups and enterprise culture. Interestingly, in the US, there were 70,000 net more company closures than startups last year. In other words, companies are dying faster in America than they're being born. Since 1978, the proportion of new US firms, less than a year old, had halved to 8% by 2011. And I think that defies the typical belief that America is the only home for startups and entrepreneurs. Now, I think, as you heard earlier, the biggest challenge we face in this country is our overdependence on London. We are highly unbalanced geographically in economic terms. London represents over 22% of the whole economy, as opposed to, for example, just 9% for Paris. I don't think, as Jim said, London is the problem. London is a massive success. It's one of the fastest growing cities in the world. The challenge is the rest of Britain. We somehow need to revive the rest of the country. And the only solution I see for this challenge of growth and jobs and rejuvenation around Britain is a continuation of this entrepreneurial revolution. I don't think established large companies will lead the way in any reinvention. And I certainly don't think large-scale public sector job creation is the answer. We simply don't have the tax surplus. So I think we do depend on this generation of entrepreneurs building some new titans to replace the aging giants, and that will help unleash Britain's dynamism. Thank you.
Luke Johnson, thank you very much indeed. Have a seat. Great. Just as we get started, have you got your yes-no things? We're going to come back to the formal poll. I'm going to ask you about London and the UK. Let's take the next 12 months, how confident or not you are about growth potential. So if I was to ask you the question about how optimistic are you about London's growth over the next 12 months, who'd say yes, no? Let's have a quick look. Okay, that's pretty good, actually. You wouldn't want that. Okay, that almost feels like you're fired on The Apprentice, doesn't it? You'd want them back in. London should be returned. Right, and if we'd say, ask the same question about the UK, more generally, how confident are you about the UK growth over the next 12 months? Yes or no? So a few people haven't got to the coffee break yet, but there's a few no's in there, but still very confident. How confident are you guys about the next 12 months, and how do things like a general election factor into any of this? Do you think that's just sort of flotsam and jetsam, or is it a bit more substantial than that?
I think it's in the technology area, I think it's potentially quite crucial, because the problems that I was talking about being solved under Tony Blair, he was really very instrumental in starting to make the changes that made it acceptable, as Luke was saying, for relatively well-educated people to become entrepreneurs. And then, for various reasons, under Gordon Brown, we kind of went backwards, and there wasn't a separation between an entrepreneur and a fat cat and all sorts of issues. And then there's been a series of very specific policy changes from the current administration that have been very positive. So this has led, and it's both Labour and Conservative, to the success that we're seeing at the moment, and the numeric uplift in the number of smaller companies or something. The big question is, if we have a change of administration, will it look like Tony Blair or Gordon Brown in terms of how it acts in this sector? And do you want to answer your own question? Well, it's very hard to tell, because at the moment you're seeing the election sort of posturing. And the question is, if a new administration gets into power, how much of their current positioning, which is slightly concerning in certain areas, is real, and how much is it playing to the gallery? Okay, constantly, we've not got a lot of time, so we'll need to bash through. Jim, what's your feel? Are you an optimist right now, or how do you feel about it?
Three quick things. First of all, I get fed never-ending streams of nonsense from my old world about how bad what's going on politically for the UK is going to be for the pound and blah, blah, blah. Fascinates me. I don't follow it anything like as closely as I did, but the markets have been completely untroubled by this never-ending discussion of this boring election. And the markets often get things wrong, but they usually get things more right than wrong, and it sort of seems like they've either figured out that whatever coalition comes isn't going to change the status quo, or I don't know what, number one. Number two, I think there is a number of, as Mike said, a number of initiatives from the preceding administration and this one that you don't really see the fruits of, good things that you don't really see the fruits of until sometime in the future, such as the efforts to resurrect non-London life, huge educational benefit, huge educational success in London the past decade, which we may be beginning to see the first signs of outside of London. And that's going to help, irrelevant of who's going to...
Is it a two-nation story? I mean, is it London doing it and the South East doing really well, and you looked at...
Well, I didn't talk about... I'm immersed in educational venture capital things in a philanthropic sense, and it is remarkable the improvement in educational outcomes for disadvantaged people in London, which is really important about the inclusive growth thing. And you've got to get that going in the rest of the country. And right now, for example, you look at coastal Britain, it sucks. Yeah. But policymakers are focused on it, and that won't change, I don't think, irrelevant of who's running the country. So there's some good things that are going to happen, and so I'm kind of feeling reasonably optimistic.
Luke, hand at the tiller, optimistic. What will you come
up with? I am optimistic. I worry that if governments are in power who don't believe in wealth creation, who don't understand the private sector, who are more or less entirely funded by hard left unions, then that won't necessarily encourage investment. It won't encourage people to take the risk to start their own job, and they may well be more likely to demonize the profit motive, increase taxes, increase regulation. And, our current success is fragile. We remain quite a high-cost nation with a number of vulnerabilities compared to some of these emerging economies. So it's a very competitive world out there, and any current success we're enjoying needs to be reinforced.
Okay, and obviously we're hearing a lot, Mike was talking about it, tech success, tech being the fastest growth. You're an investor in other sectors, so tell us about some of the other winners.
98% of the economy.
Tell us about some of the other winners. Okay, tell us about...
Well, we've got to rebalance our economy clearly away from London and away from certain areas like finance. That doesn't mean to detract from either of those, but it means, you know, it's a big, broad world out there. I think there are good stuff going on, and we've got to play to our strengths. Areas like education, like healthcare, like tourism, and, you know, high-end manufacturing. And I think we can do it if, you know, the incentives are there and the mood is right.
Okay, and Mike, you talk about fundamental technologies. I mean, quite often we're seen as the deliverer of sort of, I guess, some more superficial consumer-style technology. I mean, do you think Britain, is that as far as we can go, or is there a, where do you see the next few years sort of planning out in that respect? Can we build real tech giants in Britain?
I'd actually take the opposite view. I think what the UK tends to be good at is actually fundamental technology. So, you know, you look at ARM, that's fundamental technology. You look at the pharma sector, that's fundamental technology. Most of the R&D is done in the UK. I think we're actually not very good for various reasons to do with the size of our market, you know, with sort of out and out pure consumer tech. I think it would be very hard to create, you know, the equivalent of a Facebook here and have world domination. In fact, what we tend to do here is we create the local variant, which is then acquired by the US. So, so I think the premise of the question actually really, it is fundamental tech that tends to have an advantage.
So in the next 5 years, the next British giant, where would you see that? I mean, you mentioned a couple of sectors, but if you were to put a bet on it.
Our technology is really very, very good here. If we can make that translation, which I think is working, and we can deal with the scale-up issue, which is often to do with the capital markets here, so that people often complain about UK companies not being ambitious enough, or UK investors not being ambitious enough, but actually, when you look at a business that's got to 100 million, it's a perfectly rational decision in terms of rate of return to sell that business rather than heads down and try and get it to 1 billion. That's what needs to change.
Right. Emerging markets, Jim. Britain's relationship with them. Are we trading enough? Are we getting it? Is that where the new frontier is?
I mean, I love the focus this coalition's had on it. It's been, as I travel around the world a lot as I do, the whole UKTI style of operation is completely different focus than it used to be. It's not seen as just some extension of diplomacy. It's trying to promote things. So, but I want to answer you linked to what we're focused on here, I'm afraid. So the answer to it is if graphene out of Manchester University becomes some commercial killer, if the top-class medical school at Newcastle linked to stuff I'm focused on becomes a commercial killer, and in your hometown, I think Keith Burnett's going to be here, the advanced nuclear-related manufacturing in Sheffield. The missing bit is, you know, we have all these good things going on a lot of universities. Got to turn it into commercial killers more.
Right.
And we've got a lot of them going on at the moment.
So last question to the three of you. What should we fear in the next 5 years? I mean, there's a lot of talk about optimism, but I mean, on the grounds that there's no such thing as a sure bet, what should keep us awake at night? Luke, Jim, and then Mike to finish.
Well, clearly one of the biggest challenges we face is housing, and the government have got to address planning, and the NIMBYs have got to be challenged, because without more accommodation, the country won't function, and the inequality will increase. So the NIMBYs have just got to lump it.
Right, NIMBYs. Jim, give us an acronym. Come on, NIMBYs there.
We've got to make sure the Northern Powerhouse keeps momentum, and the broader thing about it. But something I'll raise later, but interested. I think big corporate life has got to play a different role going forward than it. Really, the amount of stories going on, the number of share buybacks that dominate corporate life, and the lack of focus on things longer term of their own investments. You pick the industry. I'm very focused on it in pharma. Mm-hmm. That, in my judgment, is not sustainable. So business itself needs to, the phrase I have, enlightened self-interest. And unless more people discover enlightened self-interest, there's going to be another problem.
Right, Mike, final answer to you.
We've had incredible success in the move to entrepreneurship. We've had great success in tech. If I concentrate on tech, we've got to realise that that's just the beginning and it's fragile. You know, Luke's statistic about 98%. We have a massive problem in this country. We have one software company in the FTSE 100, and I don't think Sade would mind me saying it's not at the racy end of the business. You know, that is a massive issue. If in 5 years' time we don't start to see more than that, then the reason why tech is so little in the economy is we are failing to actually move into the areas of the economy which are going to become larger and larger in future. So we cannot really, we can't rest on our laurels and think that the success we've had, which has been amazing, is anything other than the start. We have to continue down that path.
Right, we're going to have to leave it there at that. Please thank our fantastic panel. Thank you very much. Thanks, guys. Cheers.